So, are we living through the dawn of a new tech revolution, or are we just watching a massive financial mistake happen all over again? I mean, the hype around AI is everywhere. You can feel it. But doesn't it feel a little too familiar? Almost exactly like the frenzy right before one of the biggest market crashes in history. In this Explicable, we're going to break down 3 critical warning signs that the AI stock market bubble might just be ready to pop. Let's get into it. Okay, first, let's rewind the clock a bit. The year is 1998. The internet is this brand new, exciting frontier, and companies with .com in their name are just popping up left and right. Investors are throwing money at them, absolutely convinced they found the next sure thing. And for a couple of years, man, it was a rocket ship ride to the moon. And then, in 2000, the rocket just sputtered out. The bubble burst, the NASDAQ crashed by nearly 80%, and only about half of those .coms even made it out alive. It was a really painful lesson in market hype. And that, brings us to this famous saying, because today's AI boom has exact same frantic energy, that same feeling that, oh, this time it's different. But is it, really? The parallels are kind of hard to ignore. We're seeing the same over-the-top confidence, the same insane valuations, and that same feel of missing out driving everything. So the question we have to ask is, are we just hearing a little rhyme of history, or are we about to live through the whole song all over again? So to figure that out, here's how we're going to tackle this. We've already looked at history's echo. Next, we're going to dig into 3 huge warning signs, what I'm calling the giant's gamble, the money machine, and the data wall. And then most importantly, we're going to wrap up with a solid financial game plan to help you get through whatever happens next. All right, let's dive into our first big warning sign, the giant's gamble. And this is all about how the fate of the entire stock market, and yeah, probably your portfolio too, is basically in the hands of just a few super powerful companies. Just take a look at this. It shows you just how concentrated the market really is right now. Only 7 companies, you know them, Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, and Nvidia. They make up a staggering 36% of the S&P 500. So what does that actually mean? Well, it means if you own a simple index fund, a huge chunk of your money is already betting big on AI. Your financial future is tied directly to how this high-stakes race turns out. And make no mistake about it, this is absolutely a race. Just look at the insane amounts of cash being poured into AI. We're talking about Microsoft projected to spend $80 billion, Amazon, $100 billion, and Meta and Google together, a mind-blowing $135 billion. These aren't just investments, people. This is an all-out technological arms race where if you move too slow, you get wiped off the map. So you add all that up and you get this number, $330 billion in 1 year. To put that into perspective, that's more than the entire economy of countries like Finland or Portugal. All that cash is flowing through the economy, for sure, but it also means the market is dangerously reliant on these few giants just continuing to spend at this unbelievable pace. Okay, let's get to warning sign number 2, and this is where it gets really interesting. I call this one the money machine. It's a little bit weird, but stick with me because it's so important to understand. It really makes you ask the question, is all this massive revenue we're seeing in AI even real? So let's just follow the money for a second. Microsoft plows billions into OpenAI. Then, OpenAI turns right around and pays Microsoft for its cloud computing services. Microsoft then takes that money and buys a ton of chips from NVIDIA. And then, to complete the circle, NVIDIA invests some of its profits back into other AI startups. See what's happening? It's a closed loop where money just moves from one pocket to another. But every single time it moves, it gets booked as revenue, making these companies look way more profitable than they might actually be. And here's a simple way to think about it that just makes so much sense. Imagine I pay you $1,000 to dig a hole in my backyard. Then you pay me $1,000 to fill that same hole back in. We haven't actually created anything of value, right? But on paper, we've both just generated $1,000 in revenue. It's a super simple example, but that's basically the trick the AI money machine might be pulling on the entire market. It really is like the gold rush all over again. You've got NVIDIA, and they're selling the shovels, the chips, and they are making an absolute killing. You've got Oracle providing the land, the data centers, and then you have companies like OpenAI. They're the miners. They're digging for gold. But here's the catch. While the guys selling the shovels and the land are getting rich, the miners themselves, well, they haven't actually struck any gold yet. They're valued at billions, but they're still losing money. And that brings us to our third and final warning sign, the data wall. See, all of this investment, all of this hype, it's all built on one core belief, that AI is just going to keep getting better and better at this incredible speed. But what happens when the fuel for all that improvement starts to run out? For years now, AI models have been just inhaling every book, every article, every scrap of data on public internet. But that well is about to run dry. Some projections are showing that by 2027, AI will have consumed pretty much all of it. The amazing progress we've seen has been powered by centuries of human knowledge. Once that's gone, progress could slow way down, and the sky-high expectations holding up the market could come crashing down. And this really gets to the heart of why this is such a huge problem. On one side, you have us, humans. We learn from real-world experience, from interacting with things. On the other side, you have AI, which is stuck with a limited data set. It can be super creative with what it's been fed, for sure, but it can't just, boop, create a lifetime of human experience out of thin air. This data wall is a fundamental barrier that you can't just solve by throwing more money at it. Okay, so with all these warning signs flashing, let's get to the most important part. What should you actually do? How do you prepare for a potential crash without freaking out and making a bunch of mistakes? First things first, let's answer that big question we started with. Is this time really different from the dot-com bust? The answer is, not entirely. Yes, today's AI companies have real products. They have a clearer path to making money than a lot of the dot-coms did. But all the classic signs of a bubble, the crazy overvaluations, the sketchy revenue, the absolute mania, they're all here. So here it is, a simple 3-step playbook to protect yourself and even grow your wealth. Number 1, keep investing. Seriously, use automatic investments into broad, low-cost index funds. History shows us the market always comes back. Number 2, focus on increasing your income. Having more cash flow is your secret weapon in a downturn. It lets you buy up great assets when they go on sale. And number 3, diversify. Don't put all your eggs in one basket. Spread your money across stocks, bonds, real estate, whatever works for you. But the real secret weapon, the single most important rule of all, is this: do not panic. The people who lose the most money in a crash are always the ones who sell at the very bottom because they're scared. The biggest fortunes, on the other hand, are made by the people who have a plan and stick with it, who keep investing when everyone else is running for the hills. So I'll just leave you with this question to think about. The market is always going to have its bubbles and its crashes. That's a given. The only thing you can actually control is how you react to it. So when the next one comes, and it will come, are you going to be the person who panics or the one who's prepared to profit? The choice is yours.